Hey guys, good morning. February 11, 2020, Tuesday. Ton of trades, so grab a pen and paper. So the question of the day, will the market hold this 33.63 level that's been created pre-market? Notably, if we don't finish higher by the end of the day, EOD end of the day, guys, there is a potential for a huge reversal. Now, on the other side, if we do hold that level, there could be a parabolic move. What makes us believe that a reversal indeed could materialize by the end of the day is the fact that all stocks that have been trading and moving higher and like crazy volumes later, they're actually trading on very low volume pre-market. So some of the things that we're noticing where the money is going. So institutions are taking money out of certain stocks. We're going to show you exactly what we have discovered so far. Amazon is where they're putting the money into. So Amazon actually is clearing an important level of 21.37 pre-market. Now, you should understand that it is doing it on only 36,000 shares at the time I'm recording this, around 8:30 a.m. So it is important to understand that it could still be a reversal. Now, historically, if you look at the specific areas out of which Amazon has been breaking out, look at the fives. 21.55 is going to be a very, very important level. So the idea is if Amazon can sustain a level of 21.55 by the end of the day, it could easily end up above 2,200 by the end of the week. Now, because Amazon is rallying, it does not diminish the probability of some other sectors dropping. I think it is very crucial time to actually pay attention to the developing divergence on all three indexes. We're going to take a closer look in just a moment. We want to continue shorten the balances in certain tech stocks and travel. Watch retail sales numbers this Friday. This could be a huge catalyst for another big Friday drop. We want to stay bullish on Amazon, but some of the other stocks, not as much. We're going to go through a bunch of breakdowns on some of these trades. Yesterday, guys, was a move 8, an oddball 8. 8 move typically happens right in between two bullish moves. Considering Friday was a move 11, this is a very odd position for a move 8. Therefore, we could see that something like a oddball type sequence could happen. Specifically, we're thinking about 11, 8, 11. So despite the market moving higher, looking like it's trying to break out to all-time highs, we're noticing diminished volume as it's trying to do that. Therefore, a higher probability of a reversal. With that said, the market could do a move 11 today, which is going to look like something like this. Now, clearly, there is another variation that can happen if it's going to hold that level, and it's going to be a move 7. So we're going into a sequence 11, 8, 11 or 11, 8, 7. So keep that in mind as you're trading today. Here are the levels, and the most important question of the day again is, will the market, at the time of recording this, 33.63 is where we're at. So will the market hold that by the end of the day? If so, we could actually have a parabolic move higher, again, before a sharp drop-off. These conditions in the tech sector currently resemble the conditions before the crash happened, the tech crash in 2000. Specifically, that right now Apple and Microsoft represent 10% of the index. Those were identical figures back in 2000 before the crash. We had two stocks, which was again Microsoft and GE at the moment, which represented 9.8% of the index. Now, notably, as in 2000, the stock market was actually making consistent pullbacks as it was working its way higher. This is almost a parabolic move in the stocks if you glance at a lengthier time frame chart. So this parabolic move can actually have another rocket move higher here, followed by a much sharper drop off. The idea here is very simple. The longer this parabolic move lasts without substantial pullbacks of even 3 to 5% lower in the midst of making this move higher, the sharper the drop off is going to be. So the advantage of this, if we nail this ideal moment, there's going to be fortunes made to anybody that is watching these videos. Now the disadvantage is it could be some time before that move is going to materialize, and it could be over the course of the next 2 weeks. So just a small overshoot is possible today. So we're going to be watching the first 45 minutes very carefully, specifically pay very close attention to what the VIX is going to do. So watch this level. Today is a very, very important day. We're going to hold this, or we're going to slide overshoot and reverse is in the move 11 formation. These are the divergences that we're talking about, guys. Look at this. As S&P 500 keeps moving higher, and this was yesterday's data, right? Reflecting the close of February 10th, 2020. As we're moving higher, look what happens to the RSI. It's dropping off. Look what's happening to the volume. Now, I'm referring to the volume in the overall market on this particular slide. Earlier, the statement belonged to particular stocks that actually have been going higher on higher volume in stocks, specifically a lot of technology stocks. So with that said, this is the divergence. RSI should be moving higher if we're indeed going to sustain these levels. Now, these conditions could still prevail over the course of another week or two. So we're going to monitor these carefully. What makes it not the ideal moment at this point is the fact that MACD is making this bullish crossover. So this question mark, guys, is the only concern that is making us wait to accumulate some super big positions on the put side here. However, what is notable is we're getting this consistent reading on the divergence across all three indexes. So if we take a look at NASDAQ, this divergence is even more defined. So we're talking about a tech crash that is coming up. Okay, it is easy to see that it's the tech sector that's going to be impacted the most. So when we're talking about building put positions and big put positions, it's the technology sector that could have the highest percentage drops in relation to all the other indexes. The technology stocks could actually drop the biggest. So look at this huge divergence developing. So from here to here is where we go on NASDAQ, and this is how we drop off on RSI. Also, the drop-off pattern and volume is noticeable, but yet another question mark right here on the bullish crossover on the MACD. Dow Jones, same thing, right? We can actually draw a very solid downtrend here with the RSI being as high as above 70 right here, just picking above 70, and now we're in the 50s while we're actually setting all-time highs. Much stronger drop-off on volume here, but the bullish crossover is still here. Looks like a double top on the accumulation distribution. We mentioned in yesterday's video to watch out for a possible rotation from healthcare, which we're going to get a really good indication of that today as a couple of healthcare companies reporting earnings. And we're going to glance at those in just a second. But so far, the only rotation we're seeing is that they are taking money, institutional investors that is, they're taking money out of Apple and Tesla, and they're putting that money in Amazon. So expect Apple and Tesla to stall and move lower from here, and Amazon to keep rocketing higher potentially. So yesterday's slide right here was said short Tesla as the rest of the stock market comes to the realization that, hey, this move is unsustainable in Tesla, and it could actually be one of the signs why the market crash could actually materialize in not so distant future. So Tesla, these puts yesterday, guys, were making great money. Congratulations if you took the trade. Going into today's session, we still think that Tesla is a great short on any bounce as it's creating a head and shoulder pattern on a 2-day, 2-minute time frame chart. Now, BKNG puts, Still the same game. They did make money again yesterday. Huge drop right after pre-market. The stock going here. That was a $60 move lower. So good job if you took that trade, guys. Earnings season. We're gonna cover the trade. So grab the pen and paper. We actually got a match with one chart pattern that was shown in the Sunday, February 9th, 2020 video. Basically, RCL was the chart shown to you, so we're going to go slowly through the similarities so you can understand this next trade. Basically, the conditions is RCL, while the stock was already in downtrend, and the way you would know if it was in a downtrend, you'd look at multiple time frame charts. So after the earnings report, stock is bouncing. Okay, that was the pre-existing condition for taking the trade. The pre-existing condition on a longer time frame chart, the chart looked like this. Now, the characteristics of the similarity, the actual chart may not be like a mirror image, but I want you to focus on the characteristics here. So we had a gap down, followed by a bounce, followed by another tiny gap down, followed by a bounce, and ultimately breaking that level on a much bigger move lower. Okay, so the bounces are going against this gap down right here, and they ultimately followed by a bigger drop on stronger volume. That's the pre-existing condition. So Hasbro, similar conditions to RCL. The stock is bouncing pre-market. Now, notably, the report is not stellar, so there's really no reason for this bigger move in the first place because it didn't do well on all the metrics. It's actually missed on some of the metrics which were important, such as revenues. Revenues are down. So it shouldn't be bouncing like this based off the report itself. But we do get a positive reaction here, which is likely to fade. The pre-existing condition also met on Hasbro as you're looking at the longer time frame chart. Now look at this. The pre-existing condition was what? It was a gap down, multiple bounces towards what? Towards trying to go against this gap down that was created earlier. So today, this morning, we're at the 110, 107 level, which means it could be a failed attempt one more time to close this gap, ultimately resulting in a failure in a reversal lower. So we want to enter the position around 110. As market opens, we want to close it as the stock works its way lower. So maybe 100 level could be the first support. So take some profits there. Second level will be the 95 area. That's the trade of the day. KMPR, guys, is a notable trade. Somebody did know something. I'm going to show you exactly what I mean by that in just a second. So far, pre-market, the stock is not moving, which actually is a great condition if you're trying to buy options after the stock reports earnings. If there is no movement in the stock, when the market opens, the options that you would have been paying for quite a bit of money yesterday, now they're going to take that hit. They're going to depreciate in value, and you can buy them for a much better price today than you could have purchased them yesterday. So with that said, on any dip, looks like there was just a couple of shares traded at that 80.06 level. So if there is indeed a slight dip, we're not talking about a huge dip like a $5 drop. We're talking about maybe like a dollar or two lower from where the stock closed yesterday. You want to buy calls as it's doing that. Here's the interesting fact. Yesterday, they bought a bunch of calls, 124 calls, average price of about $3. Now, interestingly, at the same time, nobody bought any puts. It is highly interesting because typically you would see some kind of put action. Somebody would buy some puts, but nobody was buying any puts. If you look at the open interest, it's only about 18, 14, and 5, so about 30, 40 puts overall in relation to 230 puts. So we're about 5x more on the call side than we are on the put side. So based on what they were paying on these prices, basically they're expecting to break even. The stock needs to hit 83.6. For them to make money, it needs to hit 85.86. That makes your basically targeting entries very easy. If the stock drops $1 or $2 right at the open, you buy calls. You wait for the stock to bounce to about 85.86 level. One thing to pay attention to, these options, they may not be the cheapest ones, but Also note that this one doesn't trade weekly, so you're going to be buying an option that expires in 10 days. It will give you extra time, so you can actually hold on to it for 10 days. The stock could ultimately maybe hit 88, 89 bucks over the course of the next 10 days. So be patient with this trade. The option valuation may not be moving as rapidly as you'd like. Mercado Libre, 650 calls on the dip. Notably, we should know two things about this. Mercado Libre has a very high correlation with Amazon, means Amazon positive move lately, okay, could impact the way Mercado Libre shares are going to trade. So far we got mixed reaction. We got analysts upgrading and then downgrading the stock at the same time. So it could be a fight at the open that you could use to your advantage to actually pull the trigger overall on the call side. You should also know the second factor, that last time Mercado Libre reported similar results. The stock actually dropped. It bounced sharply right away, and then it dropped again for a number of days before actually recovering about $100 in price over the course of 10 days. So this dip overall is a buying opportunity to buy calls, but you really want to target your entry. So expect a bounce followed by a sell-off for about bounce. Basically, you want to be patient with this thing. The options are not ideal for small accounts, but this could be a very good trade if you got the patience to stick with it. We're watching DaVita Healthcare for the put side on the bounce. We're watching for MOH, Molina Health, for the puts on the bounce. So far, the stock actually dropped a bit, so we want to see if maybe it'll pull back to this level, closer to it, 128 to enter on the put side. But if we're seeing some strong volume coming in, we may actually want to avoid that healthcare sector based on what we described in yesterday's video, saying that, hold on, maybe we are going to witness a shift here as they're starting to pull some money from the technology sector into the healthcare sector, as it was the only sector that was able to rally in the crash of 2018 in the months of October, November, December, while the rest of the market was dropping. This was the only sector that was moving higher. We want to see if we're going to get this type of move. So if both of these stocks are moving higher today, this could be a sign that they're starting to take money from technology, put in the healthcare sector. So observe this correlation today. Overall, as pointed out, the charts look very bearish. It looks like the healthcare stocks are topping here. So watch for your entries to make money on these. Another sector we're watching clearly today is the hotels and travel. And they're not looking like they're ready for a big sell-off here. So far, Hilton reported earnings today. Earnings are good. The stock dropped a little bit and just $1 and bounced back. Now, Hilton is probably not going to be your ideal trade. It doesn't have weekly options. The options you'll be buying on this are going to be a bit pricey because they expire in 10 days. So we're very much more interested in trading the Hilton reaction by trading Marriott. So Marriott options do expire in 3 days. They're going to be priced really cheaper. Also, the stock is higher, so the same percentage gain would produce a much better trade in Marriott. And knowing that information, as described in the one chart you want to be using for shorting stocks this week, as it was overlaid and explained in the prior video on Sunday with the RCL, you want to wait for this bounce, ideally to the 147, 147.5 level in order to short this, because you could get a much bigger break lower here, guys. As far as the moves, February 10th, yesterday on Monday, guys, was a move 8, unexpected move 8. This is how it looks. We open in the red, continue in the red for just a bit, and then the first 45 minutes will break out higher. Make like a double top, pull back, looking like we were going for a move 11, and then snap back into this strong finish. So move 8, guys, is a strong bullish move. Typically, it communicates to us that there is a higher probability of a bullish move ahead rather than a bearish move. So be very careful trading stocks on the put side today. But do watch out for key levels as far as the reversal in the market because of the low volume. It could actually happen. So 2-day sequence is 11.8. This is how 11.8 looks on the 2-day chart. 5-day sequence 7.75, 11.8. This is what we got going on here. So potential double top at these levels. but if we clear these levels, expect another parabolic move higher that will be followed by a sharp drop-off in the near term. Next market move for today, guys, we're either expecting that 11, which would represent the market inability to clear those key levels, or a move 7 signifying for the parabolic move higher. So VIX fails to break above 16 yesterday, which clearly is bullish for the market. And today, pre-market, guys, VIX is all the way in the 14 handle. Now, knowing the history of the VIX, typically if it creates a gap down, it has a tendency to fill that gap. So knowing that, we are expecting a move higher in the VIX at some point in the day, especially if it's a move 11. So VIX could still go slightly lower before bouncing and finishing above 15 at some point today. These are the tunnel in VIX has not changed. So we want to use the strategy of buying VIX calls when it trades in the lower part of the trading tunnel, which is exactly the condition that we have today. So the bigger drop coming, guys, the question is, the only question is, do we want to pull the trigger on the puts today? Overall, talking about directional puts, not just the earnings plays that we've talked about. And the answer is we want to wait. We want to wait to see if there's going to be further signs of a reversal and the market unable to sustain that move higher that's developing pre-market. If not, we may have to temporarily trade the market directionally on the call side for the next couple of days until further signs of exhaustion and further development of the divergences are going to develop to a higher extent on all charts that I've shown you earlier on S&P, NASDAQ, and Dow Jones. So with that said, guys, take action, trade like a rock star. I'll catch you on the next trade soon.